welcome to the 6th edition of ET BFSI Converge 2025. It's day one. We're live from Mumbai, and today we have with us Mr. Ashishkumar Chauhan, MD and CEO of National Stock Exchange. Welcome to the event, sir. So my first question to you would be, apart from liquidity and sentiments driving retail participation, what are the structural shifts do you think are going to decide retail participation in the future?
In a way, the financialization of the country over last 10, 11 years post Jandan Aadhaar Mobile UPI and then 4G, 5G has ensured that a lot more people are now able to participate in the formal financial mechanism, and effectively the stock markets have been able to give good returns vis-a-vis other revenues like fixed deposits and other places, because of which more people, because it is easy to participate for them across India with very little friction cost in terms of the transaction charges and even management charges. So that's where people are investing more via mutual funds, via directly or in any other way through stock markets. And there are now bonds offerings which are coming up. So effectively, there is a full spectrum of instruments available to people. The knowledge and understanding in some ways has yet to be up to the mark, but broadly speaking, people also learn from each other. People also learn from their own mistakes, but other people's mistakes also, and that's where I think slowly India is becoming much more financialized. So financialized. So that's why you think it may be due to sentiment or due to the liquidity, but it's also for the fact that it's the very low cost of transactions on the markets, the far and wide reach that has happened, and this is an avenue which was not available to people before. That has now become available, and it's giving higher returns year on year on last 5-year, 10-year, 15-year, 20-year, 25-year scale, year on year, and that's where people have figured that it's also less tax, right? When you invest for long term, and that's where I think there are many benefits which the asset class and equities have given, and I think it's here to stay.
Sure, sir. Over to my next question. I'd like to draw your attention to the recent comments made by Chief Economic Advisor. He feels IPOs are becoming exit vehicles and they're kind of barring the idea of long-term capital formation. I track BFSI IPOs pretty closely, and in fact, even I can see a lot of offer for sale, and there's no, new capital that is being generated. I'd like your comments on that.
No, I think it's what I call the purist way of doing things, that what we put in is the capital and what comes out is not the capital, right? So somewhere I think broadly what has happened over last 500 years, but specifically last 40, 50 years is that the technology waves are coming faster, and because of that the democratization of technology is happening, and the scalability of any business is happening much faster, but you're also able to start businesses with very little capital. Okay. So I call it, in a way, the modern world. When I grew up, none of us had capital. India was capital starved. It is still. And so none of us thought of doing business. But today, all of you youngsters want to become entrepreneurs. And there is a way where a little bit sort of amount of capital can also create very large outcomes, which is what I call non-linear outcomes or optionality of outcomes. And that's a very new concept which has come because the technology has changed to a level where you don't have to put in a lot of money, which is called capital, to create more capital. Modern world is about putting little capital, a lot of brains, a lot of hard work, and then you can create huge capital. So he's probably looking at it from a purist situation which we were taught, on that you put in capital, then you create little output. Now the modern world has shifted. I call it capitalism without capital, and in that lots and lots of venture capitalists, angel investors, and other people are putting money, and out of those 1,000 companies where capital is being deployed, small little capital, only 1 or 2 survive. And then they grow up, and then they come to the market, and we end up saying that it's a survivor bias, that they have become huge by putting little money and they are taking money out. But the other 1,000 people would not have come up if those returns would not have been there. That's why SEBI chairman in the same conference of CII said the
Yes.
same thing, right? And so for me,
Yes. Right.
broadly, for my methodology, because I'm also a teacher, and for me, how do I explain this framework which has shifted from a lot of capital to a lot more capital, which is
Right.
the traditional capitalism, to a little capital to a lot of capital outcome. So you have to
Yes.
separate out what is input, what is output. But if you can, I mean, the larger outcomes will not come if you can't take. I mean, our angel investors and venture capitalists cannot invest in thousands of small little companies, and that's what is actually allowing them to invest in all these thousand companies, which knowing fully well that many of them will fail,
Right.
but some of them which survive will be able to make a lot of money. And for me, ultimately, the outcome matters more than what you put in initially.
Sure, sir. Interesting observations. In fact, pretty detailed. I'll move on to my next question and talk about the SME listings. How do you think it can move? I mean, more and more SME listings can move to main board.
For me, it's the same. Basically, for me, corollary that is that earlier the small businesses could not come to the capital markets because there was a belief that the large companies are the only companies which are good and can grow. Whereas now we have realized that small little capital, many of them of my entrepreneurs do not get funded by even angel investors or venture capital. And that doesn't mean their business model is wrong or
Yes.
and we have seen many businesses which have started small without venture capital, without angel investors, and they have become very big. I mean, literally, the SME markets. I mean, we started the SME segment in 2012. Now, in last 13 years, between two exchanges, we have now almost 1,400 companies listed. 20% plus companies have gone to the main board. They've become that large.
Yes.
And many of them have become multi-billion dollar companies. And so it's early days when you start getting accustomed to the discipline of the markets, of giving quarterly results, of comparing your ratios with other people, and also being accountable.
Yes.
That's when sometimes you don't get a little funding for your great idea and execution. Market is there. India has now, NSE itself services 12.2 crore unique investors across length and breadth of India.
Yes.
And if even 1,000, 2,000 of them like your idea, you are on. You can start your business, you can scale it up to the level you want. And I think India requires millions of entrepreneurs who can give more jobs rather than billions of people asking for more jobs, right? So for me, this is the ideal situation. I would want thousands and literally hundreds of thousands of companies to come and list, raise funds from people. And India has come to a level where some people are able to invest some of their funds for young companies which may probably fail more and have a chance of failing more. But if they come up, then they can get you very large returns. And that's what I would say SME market is here to stay. And it's going to be actually a competitive advantage for India going forward.
Meaningful observation, sir. I'll move on to my next question. IPOs have been over the board this year. Biggest of BFSI IPOs have happened. Biggest of NBFC, Tata Capital, HDB. We just calculated the other day. If I subtract the ICICI Prudential, which is going to happen, the issue size is as big as 44,000 crore rupees. 44,000 crore. If I talk about I want some general perspectives and key insights from you on the IPOs that have happened. What is it that you are deriving? What kind of IPOs are doing well? What kind of companies are doing well? And what will be your outlook for 2026 now that we are ending 2025?
The last 2 years in a row, in calendar years, 24, India was the largest IPO market in the world in terms of number of IPOs, but also the value of the funds raised. We raised, I think, $19.3 billion, 269 IPOs, 69 main boards, 200 SME boards. That was the largest ever and ranking of India.
Yes.
This year we will probably raise similar numbers, but lower number of IPOs because the main board IPOs have been more.
Yes.
But we will not be the number one in the world because Hong Kong has done well. US has given great returns, so they have had many more IPOs. So this time we might be number 3 after Hong Kong and US.
Okay.
But broadly speaking, it's here to stay. It's for me, early days of India's sort of financing itself. Earlier, we were dependent on foreigners to finance our capital, but our people whose savings used to go in real estate and gold, which are not that productive, right? And so now our capital is financing our own growth and helping us create more jobs. And that's where I think India is becoming a very interesting story. That it has a young population, it's going to consume more, it's going to produce more using the newer technologies, but it's also going to fund itself more going forward. And that's why, for me, our way of automating IPOs, providing what I call fair allocation basis,
Yes.
the random selection of, in case you get more applications, you get to, there is a methodology which India has created. Nowhere in the world this kind of fairness in IPO allotment and other things have been actually done by the regulators. And so I would give a lot of credit to regulators over the last 30 years since SEBI has got the powers. They have slowly tightened the framework, and now between the IPO closure and the listing date is only 3 days difference. It can further be squeezed, but overall, I think Indian markets are poised because of the trust that has been created in the process of IPO. Also, the fairness, transparency, efficiency that have been brought. Also, largely due to the Indian entrepreneurs who have, in a way, come up to the standards of people and given great returns to the investors in their companies.
Sir, a little follow up on the new age companies going for IPOs. I mean, I'm referring to some of the fintechs that have gone for it. Fintechs are not very old in India. They started late 2008 or so. So, how do you see the future, them coming to capital markets for the money?
In a way, NSE was the first fintech of India. It is still the largest and also the most valued. But fintech word was not invented. So you think when the word was created is when the world started? No. And that's where fintechs have been there. HDFC Bank was a fintech. It started as a fully automated bank, and then Kotak and ICICI used to be a institution which became a fintech. And so I don't think just because you call something fintech is using high tech, and something which is traditional is not fintech. Everything is fintech and everything is not. And that's how I see that somewhere in the line, use of technology for financial activities. There are two broad ways in which finance works. One is what I call fund-based, other is called fee-based. And so fund-based activities like what you call Tata Finance and others require a lot of funds. So they raise a lot of funds also. While as fee-based activities like Grow or say the ICICI Prudential Mutual Fund, they generate fees out of there. So they have much less risk in their business vis-a-vis other risks. And so many times we mix up a lot of ideas because all of them deal with money. We think they are the same. They are in a way fundamentally different businesses, but effectively finance performs a very important function of channelizing savings by intermediation, which is what the NBFCs and banks do, disintermediation, which is the mutual funds and the brokers do, and both are performing a very important function in any sort of modern economy. And India has done well to automate the entire chain, and that's where I think many of the new models you will see increasingly being played out, and the speed at which they come up, they become large and they scale up are going to be quite different from what we have seen in the past.
Sure. Interesting observation, sir. Thank you so much for your time. Stay tuned with ETBFSI for all the updates coming your way.